Going to talk about South African revenue services. Now, they've collected more than 2 trillion in tax revenue in the 2022-23 financial year, which is huge. Now, I know when we hit a trillion, Tom Moyane was the commissioner of SARS at the time, and he went on a big PR junket to tell South Africa about this huge accomplishment. While back at the ranch, you know, he was smoking and breaking SARS. So I'm just hoping this is not another PR exercise.
Yeah, I think you're right. I think it is often a PR exercise, but in this case, I think that considering what SARS has had to grapple with, so the inflationary environment, the load shedding, we all know the issues that Transnet is experiencing. So that was an issue. Also, China being an issue. I think that considering everything, I think SARS has done exceptionally well in their collections. And something that they did highlight is that they have a multi-dimensional tax system. So, for instance, the mining sector, there was a contraction in tax revenues.
Isn't that surprising?
No, it's not.
Why is it not surprising? Because it's been a record revenue with high commodity prices over the last season.
Yep. So something that we need to bear in mind is that the export of minerals has really been an issue. And that is largely as a result of Transnet, so the railroad systems as well as the port. But it's also been an issue out of China. So China hasn't actually been buying very much from us. So commodity exports, the demand from them has fallen. So it's not such a it was expected.
I'm not certain. I'm not certain. I just it has been a commodity cycle over the past couple of months. They are reporting, yes, we have infrastructural and logistical issues related to Transnet specifically and moving things to the port for export. And I know that Europe has taken out coal like never before. Yes. So I'm reading, high commodity prices, profitability to the mines, and more revenue. And you're saying it didn't, they didn't achieve that.
Yeah, so I think it depends on what commodity you're looking at. So yes, coal definitely, but there's other commodities as well. So okay. I think that's overall where the issues have been. So for instance, I heard the other day that there was a massive loss of produce going out of South Africa that sat at the ports, and I'm talking billions of rands. That expired, that went, excuse my Afrikaans, but went fraught because they couldn't get it out of the port in time. So the ports are more of an issue than we actually realize.
No, absolutely. And I'm just getting the sense that that there's a lot of working together, private sector working with Transnet again to improve some of the stuff and waking up to the issues that relate to our logistics capability. Yes, and there was a strike action at Transnet that also impacted fraught food.
Yes.
Yes. Okay, so we've got an efficient SARS, that's what you're saying, and we should celebrate it as opposed to Tom Moyane that wanted to deflect from the issues.
Yes, so I think that SARS's capabilities are improving again, and I think that is something that we should celebrate. There are issues. So, for instance, like I mentioned, the mining sector contracted, but then the financial services sector has done really well, which has helped balance out the mining sector. So that has helped. And then also manufacturing has also helped. Interesting, personal income tax collections have also gone up by 8.3%.
And that's to what, 360 billion?
Yep. So it's a massive number, which is, and if I'm not mistaken, the wealthy are contributing largely to that, which is expected in this sort of economic environment that we're dealing with.
Yeah, that's interesting. I'm chatting with Michelle Austin, Keegor Group's financial director, and we didn't want to take the usual pundits. We want to get a young woman to talk to some of these things, maybe more perspectives coming out of the equation. And we're talking about SARS, specifically 2 trillion in tax revenue. I don't have all the questions because I don't know the subject necessarily to the extent that you do. So if you have a question, Please WhatsApp your question 0725671567 or tell us what you think on the issue that we have raised. You can call as well and chat directly to Michelle on 0214460567. It's a noisy space you're in, Michelle, but I'll forge ahead.
Thank you.
Okay. You are at work. Now, you are raising a flag around VAT refunds specifically. Tell us what you are alerting us to.
So the VAT refunds have surged by almost 22%. There's a couple of reasons for that. So one is zero-rated exports, it's really great. And then there's also been capital investment imports by companies. So the reason for that is mostly due to maintenance because of load shedding and damage that load shedding has done. There's also been extension of the life of mine. So, for instance, in the mining industry, a lot of these big smelters the power cannot be shut down. If it shuts down, it causes enormous damage. And it's one of the reasons why some mines run, in fact, most mines run 24 hours a day because they need to keep things up to temperature and not stop or not have an unexpected power dip. So they've had to do quite a lot of maintenance. There's also been some capital expenditure relating to the extension of the life of mine. And I think that those are the main reasons for it, and it's something that we need to keep in mind, is that load shedding is doing more damage than just decreasing revenue. It's causing maintenance issues with equipment as well.
I want to remind you, I got a PhD. I passed high school with difficulty, so you gotta go really slow with me. So what I'm trying to understand here is you are saying that there's a lot of capital investment to mitigate load shedding impact. So we are buying more than we're selling, and hence our VAT refunds have gone up by 22%. Is that the logic?
That's one of the logics. So the other logic is that we have had more exports, and those are zero-rated. So What it does is you're able to claim the VAT on stuff that you're purchasing, but you're not paying SARS VAT on your sales.
Okay, right. I actually managed that. You explained it so well. Thank you. Okay, so now I know you're not a political commentator. So improved efficiencies by SARS means more revenue coming in and more people falling into the tax net. Good. Tick. Celebrate. That money must be spent by government. Those efficiencies have not necessarily improved. How do we get that improved?
Well, Clarence, that's a question that I ask myself every day. I think, like I said, I'm not a political commentator, but I think that what we need to focus on in the country is getting the right people in the right positions. Because with the right people in the right position, they are able to make a bigger impact and make the right decisions. And stop all sorts of corruption, etc. So I think that is something that we need to focus on as a country. I think that corruption and stealing things and government tenders, etc. I think they need to be handled better. How that is the case without having the correct people in the correct places, I'm not sure.
Okay. Now, the implications of this VAT increase. Now, so more VAT, 22% increase in VAT refunds. What's the implication to you, me, and the rest of the overtaxed, underpaid middle class? Is there cause for concern?
I don't think so at this point. It's just from a SARS perspective, it's a tax, a cash flow implication. So I think that it is highlighting the load shedding impact. What it is showing as well is that the zero-rated exports are improving and increasing despite Transnet. So I think it's great signs. It's signaling the right messages. Especially considering the state of the economy.
Yeah, so there's one little silver lining, record-breaking revenue, But the electricity crisis now, with projected load shedding every single day anticipated for the next 12 months, it's still going to come to bear.
Yes. I think that's basically what we're going to have to keep an eye on, is the numbers over the next number of months, to actually see what the impact of the high levels of load shedding are. However, that being said, I think South Africans are resilient, and we mark a plan. So I think businesses are resilient, and it's just a matter of time until they are able to make that plan.
Yeah, and I think the mitigation that businesses and private homeowners are looking at and implementing at this moment in time, we don't quite know how that's going to impact demand, which would also hopefully relieve stress on the load shedding front.
Yeah, 100%. And I think South Africans are also very innovative, and I think that there's massive opportunities for new businesses to come into play in that space. So I think as South Africans, we just need to be mindful. Although things we feel very negative, I think we need to keep positive and keep our eyes out for opportunities, because that's where we're going to, that's where our growth lies, especially as SMEs.
I'm talking to Michelle Austin, one of the winners of the 40 Under 40 Business People on the African continent. She's Keegor's group's financial director. We know she understands the financial stuff. Let's see if she's psychic. Tell us about the outlook for the South African economy in the coming year. Did you get that, Michelle?
Sorry, I didn't. I missed you.
Okay, we wanted to know what the outcome for the South African economy will be in the next year. What are you seeing?
I think things are looking a little dire, but I think it's just the state. It's not just South Africa. We need to bear that in mind. It is a worldwide problem. The inflation, and we're not sure what to expect. So I think we just need to kind of grin and bear it in the short term. I think in the next 2 to 3 years, things will improve. It's the inflationary environment that we're in. It's the economic, the environmental. It's a combination of a multitude of factors. So I think South Africans in general just need to just brace a little bit for a bit of a rough ride. But I think in the next 12 to 18 months, things should start improving again.
Get rid of your debt and, stock up on the gold. Thank you.